Hi there, welcome to Kneppy Invest and welcome to August the 2nd. I don't have my watch on. Usually I have a look at my watch just to confirm it is the right date because you just never know. But I'm pretty sure today is August the 2nd and it is a red day. Today is fairly important, or days like this are fairly important in discovering what sort of mindset and personality you have when it comes to investing. If you are absolutely hating today, if you just can't stand it, if you're in fear, you won't be able to go to sleep tonight, I probably would have advice for you. I won't say it right now because I can't give advice, individual advice, but that would be concern. I look at this as a possible opportunity, and it's simple as that. The market's down. A few companies' share prices are probably down today. Hopefully, some companies I like. And if the market does start to fall even more, that makes me a little bit more excited. So I'm one of those people. When they see the market falls, I get more excited. So days like this, don't really care because what happens over time? The markets go up over time. That is an absolute truth and something we all have to realize and understand. Markets go up over time. So don't be concerned about what's happening today. I will explain why we're down 2%. Some of you might say, be saying right now, well, the American markets were down significantly overnight. But why were the American markets down? And everything is in the red. I'll be surprised if many companies in the ASX 20 are up. I probably would assume maybe one. Maybe Woolworths is up. That's a defensive stock. Anyway, so what is the agenda for today's video? I do want to talk a fair bit. I thought today was going to be fairly quiet. Well, last night I would have assumed today would be fairly quiet, but I want to talk about why the American market is down, in particular paying attention to a fairly important economic indicator that is actually forward-looking. Also talk about uranium. I had a look at the biggest losers today, and it was just a stock full of uranium companies. Have a look at USA Quarterlies, some really interesting results released after they closed. Yes, I'm looking at you, Intel. In fact, after market trading, I think that company was down something like 20%. I'm pretty sure Apple and Amazon also released their results after markets had closed. Another company, Snapchat. I did see a tweet about that company, and their share price was down a fair bit. And then we'll have a look at the ASX today, top 5 stocks of the day. And I thought this could have been quiet. What a group of top 5 stocks, particularly the first 3. We're talking about Resmed, Block, a company I own, Vysarn, also a Resmed. Vysarn share price last time I looked was up 10% on a bit of an update. I'm going to have a look at a company called Curvebeam. There had been at least one comment saying this is the next Pro Medicus. So first time I've looked at Curvebeam, they did a capital raising and a presentation with that capital raising. I had a look at the presentation last night. I went, okay, I can see why someone might think this is the next Pro Medicus. Doesn't mean they will be the next Pro Medicus because that would be absolutely amazing. And then a company called Pinnacle Management Investments released their results last night after markets had closed. And I'm pretty sure the company share price is up a fair bit as well. A few companies did not make it in top 5. Bomoto, something like that. Vmoto. What's the ticker code is VMT. No reaction from the market here. They did a market update, and because the market hasn't reacted, I thought, well, no surprises here. Another company called UBI, Universal Biosensors, released their results, but a fairly small company, only about $2 million in their half-year results, not the full-year results. Only about $2 or $3 million in revenue and not profitable. So I thought I'd just move on to the next company, and probably the company that would have made it into the top 5 announcements if I decided some of these other companies didn't or weren't good enough, would have been Johns Lyng Group. Share price actually up, and they announced an acquisition. This is another company I own. It's actually in my high quality portfolio. It's a little bit of stretch calling this company high quality, but I think you could argue that. Anyway, so let's get stuck into the video, the crux of the video. And I did put PMI as the number 1 topic to talk about. And what is the PMI? Now, I always think of this as PMI. I always think of this as Product Manufacturing Index, but it's not. It's Producer Manager Index or something like that. Producer Manager. Purchasing Managers Index, PMI. And this is from Investopedia, measure of the prevailing direction of economic trends in manufacturing. And this is a forward-looking index. It's like a survey. They do a survey of supply chain managers. So you might be thinking, why would they do a survey? Why is that important? It's just telling us about the sentiment of some very important people within the economy. And these people, I wouldn't say they drive the economic engine, but they're close to it. So the Purchasing Managers Index, or the PMI, is really important because it is forward-looking. It's gauging the sentiment, and that can be very important because sentiment is important, not only when it comes to charting or technical analysis, it's also very important when it comes to the economy. Now, within this particular PMI, they do measure different things, and I'm just going to go through Investopedia. I'm pretty sure they do. They go through the calculation, how the PMI works. Here it is. So there's 5 major survey areas: new orders, inventory levels, production, supplier deliveries, and employment. Now, they measure this number between 0 and 100. 50 is the important number because if PMI is above 50, that is pointing towards economic expansion. If it's below 50, that's pointing towards economic contraction. And today, at about midnight, in fact, what I'm going to do is I'm going to go to the, I actually had no idea this was being released. I'm just going to go to the NASDAQ, and I'll just show you how important this particular index is and how a lot of people miss it. If we go to the 5-minute data, in fact, we'll go to the 1-minute data. Why not? 1-minute data. And in TradingView, they actually do, they haven't got it here, but if you click on this, you can actually see what's caused the market to go up or down. For some reason, don't like this, they've got it, here it is, here it is, here it is. Here it is, the ISM Manufacturing PMI released at 0Z local, oh, not 0Z, that would be local time, that would be about 14Z, which is Zulu time. 14Z Zulu time is about midnight our time. So 0Z here is actually local time, not Zulu time. So I'm very accustomed to using Zulu time or Central time or UTC time on my job because everything is in UTC time because I do forecast for the aviation industry, and everything, all time there in the aviation industry, because it's worldwide, is standard to UTC. So if I do a forecast, it's based off UTC, not local time. I know, so I'm going to have a bit of a tangent here, but this was released right on midnight, or 0Z. So that's midnight. Anyway, so the forecast PMI, this is the ISM manufacturing PMI, was 48.8. It came in at 46.8, which would have been a significant concern. In fact, what I'll do now is go to an article, news. And what about, was it this one? Yeah, I think it was this one I liked. I like this one from FX Street. Yeah, and I think it mustn't have been this article. It was another, oh no, it was this article. So they go through the different components of the PMI. So the employment index declined sharply to 43.4. So there's other indications that the labor market in America is undergoing a bit of, I wouldn't say problems, but there is now concerns within the labor market in the United States. I think it was Intel fired 15% of their staff. New orders index fell to 47.4. Prices paid index rose to 52.9. Prices paid index is, as I mentioned here, the inflation component. So this is actually pointing toward stagflation. I'm not sure if anyone realized that. I didn't see any comments on that. But there's still a little bit of inflation, but all these other things are actually decreasing, getting worse, which is a sign potentially we are moving towards stagflation, which is a slow economy, like slowly growing economy, or maybe even contracting economy, but elevated inflation. Something central banks around the world don't want. Worst case scenario is stagflation. So anyway, let's go back to the chart because the NASDAQ actually opened up higher. Yes, the NASDAQ actually opened up higher. So let's go back to the 1-minute data chart and we'll go straight to midnight. Here it is, midnight. So yes, the NASDAQ opened about 11:30 local time and it rallied higher. Yes, the NASDAQ was up at about midnight up. And then right on midnight, when that news was released, we started to see the market, Nasdaq really move into a bear market, a very short-term bear market, because there was a nice little rally towards the end, but definitely this PMI news did, I suppose, cause a little bit of concern out there. Now, what was really interesting about this, I actually was looking or reading, or maybe I was watching this day trader in the United States, and they look at the economic news really closely. And what they usually do, according to this one person, they're out of the market just before any sort of important economic news is released. And then as soon as they see the economic news, they will trade that news. So the trade here is shorting the market without doubt. It would have worked out really well. But the other really interesting thing about this PMI index release was copper. This is absolutely amazing. So where is copper? Actually, I've got to go back further, because copper trades all day. So this really tells you, because copper, again, is sometimes referred to as Dr. Copper. There's a relationship between copper and the state of the economy. And in fact, copper was looking really good. And then right on midnight, that's when the peak in copper prices were. And then the next 10 minutes, it just collapsed, an instant collapse. You just see a massive amount of selling on copper, and within that first 10 minutes after midnight, and it just continued all day. In fact, copper had a pretty bad day. I believe it was down. After looking, it was going to be up. Yeah, had a pretty good day yesterday, up 2.26%. Started higher at the beginning of today and then dropped 2.25%. And that's because of the PMI index. There were some other reasons as well given, including weaker labour market, why the market fell, or the indices fell in the United States. But I believe it was the PMI, a weaker PMI than expected. Now, why is the PMI important? I'm just going to show you this. So this is the PMI. We'll have a look at the economy. And here it is. Now, I'm going to get rid of these moving averages. This is the monthly. Well, it should be the monthly. Yeah, this should be the monthly PMI because it comes out every month. I'm going to get rid of these moving averages. They're irrelevant for this sort of index. And I'm going to get rid of the crossovers. All right. So the important level, right, or for the PMI is 50. In fact, it's a little bit lower than that. I'm going to put it at 45. I'm going to put a line at 45. No reason, but you'll see why I put that line at 45 in a second. I'm going to make this color red because style, red, it's important. Make it a little bit bigger. So we're just above 45 right now, but you can see, and this goes back, we'll actually go back further. We'll go back to the 90s. Actually, go back further to the 80s. Now, we'll skip the 80s and start about 1990. And whenever the PMI gets below 45, we're in recession. That's an absolute, that's a given over the last 30 years. So back in 1990, it fell below 45. In fact, it fell below 40. Back during the dot-com bubble burst, it fell below 40 for quite a period. During the GFC, it fell below 45. And during the COVID-19 financial panic, it fell below 45 for a very brief period of time. So there's a correlation between the PMI and the state of the economy. I think that's it's a truth. And that's why the PMI, the Purchasing Managers Index, or the ISM, Purchasing Managers Index, is quite important. We're not there yet. Now, this is just a couple of months where we have seen a dip from just above 50 to below 47, wherever it is now, but we're still above 45. So it's not a reason to get concerned yet, but it's the rate it's fallen the last 2 quarters, and the very fact it was much weaker than expected. So, on to a couple of tweets about this. So this is from James E. Thorne. ISM PMI employment 43.4, only time lower, internet bubble popping, the GFC, COVID-19. So that's one of the, what do you call it, the things within the PMI, the employment. Here's another one from Charlie Bilello. The ISM manufacturing PMI has been below 50 in contraction for 20 out of the last 21 months. With data going back to 1948, that's only happened one other time, 1989 to 91, recession in 1990 to 91. I like this particular chart, and I try to find this because it also puts in the recessions, which is these grey shaded areas. And you can just see how there is a correlation between the two. Now, the one thing you'll note here is in all of the recessions, the PMI reached its depths, its lowest point at the end of the recession. Yes, towards the end of the recession, that's when the PMI was its lowest. And as the sentiment improved, we came out of the recession. So we're not technically in a recession just yet. But if we continue to fall, I think there is potential we might move into recession. So there's that potential, but it's not there just yet. Something to keep an eye on, in my opinion. And Lynn Alden, pretty sure a lot of you probably heard of this name. The PMI results out now are bad across the board, weak in absolute terms, and also below consensus expectations, which is, I think, the most important thing. They're below what we expected. Reinforces the economic softening narrative. Okay, so that's the PMI. Doesn't necessarily mean we are moving towards a recession, but I think the chances are now a little bit higher because this was a really weak number. That's why the American markets fell, and in fact, fell across the board. So we have the Nasdaq down 2.44%, Dow Jones down 1.2%, even the small companies, the Russell 2000 down 3%. So that rotation from the big tech companies into small caps has been, I wouldn't say destroyed, but I'm not sure the narrative is there just yet. Gold, however, okay day. Gold's not affected. Copper's affected. Gold's not really that affected. Okay, so that's the PMI. Uranium. So I did have a look. What was it? What was I looking at? I think it was the XAO. So sometimes what I do when the market is down a big, I'll go to ComSec, put in one of the indices and go to the constituents, and you can see the index makeup. I just want to see which companies had gone well today, which companies had gone bad. So I just went to the ordinaries, and I went to the change, and the worst performing in the ordinaries, and it was just uranium after uranium after uranium after uranium after uranium. In fact, most uranium companies here are down by more than 10%. Deep Yellow down 18.7%. Boss Energy down 14.4%. I went, ooh, something's happened in or with uranium. So, of course, I have no idea. So I just went uranium. That's all I think I did. And of course, you get all this information about uranium. Some news flow from uranium. Nothing much there that I could see. So I just went to news section. And then straight away, this is the reason why. Kazar Topram raises guidance following increase in first half output. The world's top producer boosted production 6% year on year, and they're more bullish forward looking as well. That's all it took for this weakness in uranium. And that's really explains why I'm not a big fan of mining companies. If this is all it takes to cause chaos in uranium companies in Australia, then that shows you how much power strength they have and why I'm not a big fan of mining companies. Even trading mining companies, I'm becoming less and less a fan because you just don't know which direction the commodity is going to go. You just don't know. So yeah, that is why uranium's down, because this top producer is raising production. That's all it took. Anyway, so pretty bad day for uranium, and I'm hoping you don't have many uranium companies in your portfolio. Now onto some USA quarterlies, which in itself is interesting. So this is the earnings calendar via NASDAQ website. This also includes New York Stock Exchange companies, so not just NASDAQ. So today, or the last 24 hours, we had Apple, Amazon, Toyota, Shell, Intel, ConocoPhillips, Vertex Pharmaceuticals. Booking, so some very big companies have released results, including Ferrari have released their results. Go Ferrari. Bud, Anheuser-Busch, which is Budweiser. Pretty sure that's Budweiser. Mercado Libre. Yeah, I love this earnings calendar. Just absolutely love it. Tells you how much of a surprise the earnings per share is. So, for instance, Apple was a bit below consensus. Amazon was well below. Toyota well above, almost double. Intel was worse. Booking down. Ferrari down as well. Anyway, so the other thing I like about this is in trading views, sometimes, not this time of day, but they will have aftermarket trading. But they don't have it right now. I don't think they would have it right now. It's closed. But you will see this probably after about 4 or 5 in the afternoon. You'll see this extra line. So, for instance, just below the share price of PayPal, there'll be extra lines. So you can just see how the market is, what the sentiment in a company is in the pre or after hours market. So nothing there right now, but in the earnings calendar, if you just click on any of these companies, for instance, Amazon, click on Amazon, it'll take you to Amazon's page, tell you how they're trading, but they also have an after hours section here or pre-market. And right now, because Amazon, this is important because Amazon released their results. I just want to see what is the mood among investors. And in after hours trading, Amazon share price is down 8%. And not a good, so the results were not good. The market didn't like the results, put it that way. But then I had a look at Intel. So some people were getting excited about Intel because chip makers, that sort of thing. And share price down 5.5% today. And then I had a look at the after hours and I was like, whoa, hello, down at 23.4%. And then, of course, I had to Google Dell, just how to do it, Dell, and just to have a look at the news flow from Dell. There was no news flow there. It was, no, Intel. What am I doing, Intel? Why for some reason I've got Dell on my mind. Now here, yeah, I was going to say, why is there no news flow on all these massive cuts in 1,000 cuts in jobs, 15%, 15,000 job cuts after AI fumble, mid struggles to keep up with NVIDIA and AMD. 15% of its staff. Sometimes the market likes that because they think, wow, cost cutting, that's going to be great for the company moving forward. But the market has not liked this one for Intel. I was going to say Dell again. And if you have a look at the chart for Intel, the question would be, why would you be owning shares in this company? This is just based off the chart, nothing else. Because the chart looked absolutely horrible even before this. Share price had moved into a well-defined downtrend. So chart looked pretty weak for Intel, and the chart is going to look even weaker when it opens tonight at 23:30 local time. And this comes back to a tweet. So I've got a tweet here. I don't really have to show you the tweet because I've already talked about Intel. Oh, this is in regards to someone buying a lot of stock in Intel today. So someone bought $700,000 of stock of Intel today at $30, down $150,000 after hours. Intel falling 20%. And there was another one here, Snapchat, a company I wouldn't even think about buying, down 22% after reporting second quarter earnings results. Down 30% today, including its regular trading hours. So quite a few companies are releasing bad results. Meta didn't though. They actually released pretty good results, and the share price was up about 4%. Okay, so have a look at the this particular page. Where's Snapchat? Oh, Atlassian also released their results. So this was one of the biggest days, just based off market cap. Hershey released their results. Oh, much better than expected. I like that. I'm a shareholder of Hershey, by the way. And there's Block into the top 5 stocks of the day. Where's Snapchat? There's Resmed as well. Made it to my top 5 announcements of the day. And Snapchat. This video is going to go much longer than I anticipated. Thank you, market. So Snapchat has a market cap of 21 billion. The reason I'm looking for that is this is listed by market cap, and there's Snap. I just want to see what it is in aftermarket hours. Down 3.83% today, and in actually Intel is actually worse. Anyway, I'm going to have a look at that again later in the day because this was a big day when it comes to earnings in the United States. Release earnings every 3 months or every quarter, which some people might think is quite insane. Okay. And let's go to the ASX Today. 24 minutes in the video, and I'm just now getting to this important part of the video. So we're in a sea of red. We already know that. You have to be living in a cave if you didn't know that. Some people actually suggest or advise on a day like this, just go away for the day. Don't have a look at the screen. But again, I think you're letting emotion. If you need to do that, you're letting your emotions drive your decision making, and that's very dangerous when it comes to investing. So all sectors are down. I thought maybe staples could have been not as down as much, down 1.2%. Discretionary, understandable. Financials, energy, IT, real estate, all down by more than 2%. I thought maybe gold could have had an okay day, but that's down at 0.6% as well. I'm just going to open up the ASX 20 fairly quickly I am struggling to think of a company that might be up. Maybe one company is up, and I have no idea what that company is. If it is up, no. Yep, it makes sense. Everything is down today. Goodman Group down the most, which is understandable, and Transurban, Telstra. Yep. In fact, when the best performing company is down 0.73%, you've had a bad day. Not all companies have had a bad day, however. So again, go back to this particular ComSec chart, and if you turn around the change, some companies are up. Square is up, or Block is up. Latitude Financial's up. Westgold is up. Superloop is up. Go Superloop. What's BRL? BRL. What's that? Is that Bathurst something? Yeah, Bathurst. That's up. Opthea Care is up. Yeah, Pinnacle. There's Pinnacle. PWR. Is that Peter Warren? Yeah. Yeah, so not all companies are down, but the majority are. And in fact, if you see a few companies in your portfolio that are in the green or up today, you'll probably say, yay, go companies. Okay, so in fact, I did see one company up a fair bit today, and this is a company I featured yesterday. Money Me up 11.9%. So it seems like their update yesterday has sort of filtered to the market today, and all the share price got above 10 cents and has pulled back below 10 cents. So a bit of strength in Money Me. The reason I mentioned that is I saw another company called Pepper Money in that good performing list. So it looks like there is some increased interest in this particular space, sort of the smaller lending space of the market, because these companies have been absolutely destroyed over the past few years. Okay, so let's have a look at the worst and the best performing companies today. Okay, let's start with the gainers. This is where it gets exciting. A company called Space Talk. I did actually mention this company a few days ago. Yeah, so most of these companies are fairly small. In fact, the biggest company here has a market cap of 80 million, which is not surprising. Yeah, the biggest company among this list is 80 million. There's Money Me. Still has a market cap of 74.4 million, so still fairly small, but they are profitable, and maybe they've turned a corner and starting to grow now. So let's have a look by market cap. This is where it gets interesting. So Block's had a good day. They released their results. So I will talk about this company. In fact, it came in number 2. Maybe I should put it in number 1. But I actually do like Resmed's results, even though share price was down last time I looked, which is weird. Westgold, something happened with Westgold. Must have happened. Did they release some news today? I can't remember. Okay, just a merger. Yeah, that's probably why I didn't realize they released anything. What about Liberty Financial Group? I can't remember this company releasing anything. No, they didn't. It's just a bit of noise. And it's not surprising to see the Beta Shares Australian Strong Bear Hedge Fund in there among the top performers today. That's sort of a no-brainer. Not the sort of company I would, or not the sort of fund I would even think about putting money in. And there's Vysarn, also coming in the top 5 announcements of the day at put it in number 3. They released sort of like a trading update. And yeah, the rest of, yeah, you just know the very fact that two strong bear ETFs are in this, or financial services are in the top 10 performing stocks on the ASX, just means we've had a really bad day, really down day. Okay, so let's have a look at the worst performing companies. So we're going to see a lot of uranium companies here, and probably a few other small companies. And Deep Yellow is actually the 3rd worst performing company, just behind 2 companies that don't trade much: Oliver's Real Food and Shekel Brain Way. Shekel Brain Way does not weigh brains. They produced weighing machines, and also producing non-man supermarkets or something like that. But yeah, very small companies, and Deep Yellow, probably the worst performing company on the ASX today. Again, uranium. Someone also mentioned, have a look at lithium, how lithium companies perform today. But I don't see many here. Quickstep, yeah, a lot of uranium companies. And by market cap, what's happened to Domino's? I understand Zip. That's just a bit of, profit taking. Did Domino's Pizza release anything today? I don't remember seeing them release anything. No, they didn't. Again, that's just negative sentiment. And just mostly uranium companies. A few other companies in here as well, like semiconductor ETFs down 9%. Sierra Resources down 10.7%. Core Lithium down 8.6%. Aries Resources down 7.5%, which makes sense. That is mostly copper. So anyway, so interesting day on the markets and still dropping, according to this. Okay, so let's get to the top 5 stocks of the day. And coming in number 5, I do have to talk about Pinnacle because they did release their results yesterday or last night, and the share price is up, which is good. I have always thought of this company as a fund manager of fund managers. That's how I've always thought of this company. And I just wanted to I just wanted to see or verify what I thought about this company is actually true. So I actually went to their website, and this is the company's website. And I just wanted to confirm, I went to their About section, business model. Pinnacle Investment Management is growing a diverse family of world-class investment manager firms affiliates, along with holding equity interests in our affiliates. So it seems like they are an investor in other fund managers. That's what they do. They invest in other fund managers. They might be quite selective. Business model, well, that's the business model. There is potential they are quite selective what fund managers to put their money in. So if you have a look at the funds or the affiliates, here they are, or the Hyperion. So I actually do know a few of these. Hyperion Asset Management, Plato, Solaris, Spheria Asset Management. So they are sort of like a fund manager of fund managers, if that makes sense, or investor in fund managers. Now, one of the reasons why I have been following this company is the chart. So before we have a look at the chart, let's have a look at their results. So they released it just after market closing. What I'll do is I'll go to the investor presentation. Oh, I don't want to, it's 75 pages long. This might take, didn't take ages at all. So everything's up. So yeah, it's the quality of that page is terrible. So revenue up 8%, expenses up 36%, profit up 18%. So everything is up. There's no complaints. The market liked it. If you have a look at this page, funds under management, it's been increasing the last, forever really, since 2007, from 1.7 billion to 110.1 billion. So beautiful growth in funds under management. No sign of slowing down. There was only 1 year that it fell. Actually, there was 2 years it fell. Way back in 2012. Also fell in 2022. But the last 2 years it's grown off its nuts. And the last thing I want to look at, and they also have retail funds under management, international funds under management. Not the sort of company I would invest in for the long term, but the chart looks brilliant. Beautiful looking chart for Pinnacle. And I am sort of kicking myself because it did break out. No, it broke out back in February and then it pulled back. And I was following this company when it pulled back. And I went, this could be a buy the dip situation. And then never hit the buy trigger. And the share price has increased by about 70% since then. So there probably could be arguments that this company is overvalued. Possible. If you look at the weekly chart, is the share price at an all-time high? Not quite there yet. Not quite as high as the share price got in November 2021. But if you have a look at the longer-term chart, it's a beautiful looking chart. It goes all the way back to 2007. And really, in fact, if you look at the weekly chart, it broke out in February 2015 at a share price of around about $1. And there hasn't been a sell signal since on the weekly chart. Just on the weekly chart. Probably got close during the COVID-19 financial panic or just after. And really hasn't been close, has been getting close during this little sideways period. But it had broken out. Beautiful breakout back in early of this year. So that's Pinnacle. And the only reason I've been following this company is because of the charts. Anyway, fund manager of fund managers. Okay, that's coming in number 5. We have Pinnacle Investment Management. Coming in number 4, we have this company that someone said I'm not sure what they said, might be the next Pro Medicus or is the next Pro Medicus. And that's Curvebeam. They did a capital raising yesterday, so they're not trading just yet. They're still in a trading hold, seems like, which could be a good thing. Are they still in a trading hold? There's been no trades today. Yeah, there must be in trading hold, no trades. Doesn't look like the share price will move all that much once they start trading again. But they did a placement. Usually when a company does a placement, they start trading straight away, but nothing yet. Anyway, I'm going to open up 2 things, the Appendix 4C and the presentation. So just remember, someone likened this company to Pro Medicus. Well, not now. They have the potential to become the next Pro Medicus. So always look at these companies' financial results, just see if they have any revenue, any receipts. This company has had $2 million of receipts in the last quarter. Operating cash flow negative by a fair bit, $4.6 million for the quarter, $21.6 million for the year. So, of course, they need to raise capital because they're burning through cash. They haven't quite made it just yet, but receipts are growing. Do they have that? Devices, purchases, orders by region. So what do they do? And this is where I went, oh, yeah, I can see why someone might compare this company to Pro Medicus. Here it is. Is it that one? They are a device. Curvebeam AI is a medical device company focused on commercializing weight-bearing CT scanners and AI SaaS solutions. So first to market bilateral weight-bearing CT scans, enhanced high-rise CT provides in-office high-resolution 3D scans and future AI-aided clinical assessments. So I just went through this whole presentation and went, okay, I can see the attractiveness of this company. Now, they haven't quite hit that inflection point yet, and the addressable market is quite big for this company, and they seem to have a lot going on. So a lot of potential for growth. In fact, down here, they mentioned 37 granted patents, 27 pending patents internationally. So a lot going on. First to market. They've already got revenue. How quickly they're going to grow that revenue is important. Commercial stage company with revenue of 11.5 million, circa 50% growth year on year. So definitely, I can see the attractiveness of this company and why someone might prefer. I was going to say prefer it. Someone might compare it to Pro Medicus. For those who don't know Pro Medicus, they also are a medical device company in imaging IT provider. Yeah, imaging IT. So sort of in the same area, and I definitely understand why. Yeah. So that's probably what I'm going to say. But for me, not quite yet. I was thinking maybe dabbling, putting a small amount. I'm thinking about doing that for these type of companies, just putting a really small amount. Typically, in the past, if I really liked a company like this, I'd put my whole amount in. I'd put whatever I want to, like maybe a few $1,000s in, maybe $4,000 in. And now I'm thinking, instead of doing that, just put $500 in, a very small amount. Don't have to pay any fees now, very small fees for buying some shares in the company. And if you do put that small amount in, you're actually more likely to follow the company a little bit more closely because you have a small amount in the company. So I am thinking about doing that for these type of companies, just putting a small amount in, and then if it goes pear-shaped, you don't lose much. But if the company starts to break out, if the company hits an inflection point, you can add more to your position. So I have been thinking about doing that. And there are quite a few companies I want to do that with. I've already done it with Clarity Pharmaceuticals, not 500, put $1,000 into that. And I might do it with this because whoever wrote that comment, I'm glad you wrote that because as more and more as I look at this company, I'm liking it more and more. But my only concern, they haven't reached that profitability, that cash flow generation just yet, but they have the growth. Okay, so that's Curvebeam coming in at number 4. Now, a company I do own, I've owned this for a while now. Share price, it's only up 5.2%, which is understandable. Share price did get as high as 42 cents, but we have seen the share price get to an all-time, maybe not an all-time high. That's Vysarn. This company released an investor update today. Well, I actually didn't know how the market would take this. I don't know why you would sell Vysarn. So they are sort of like how would you describe this company? Let me tell you how the company itself describes itself. They are a dynamic company focused on integration development of water, carbon, environmentally specialized services and technologies. Vertically integrated model currently provides end-to-end water services to various sectors, including resources, urban development, government, utilities, and agricultural. The responsible management of water, blah, blah, blah. If I had to tell you what this company does, I would have said they're a water solution company. So letting them describe themselves is probably a little bit better than what I would do. Anyway, a nice little update from the company. As a shareholder, I really like this update. Market cap of the company, 159 million. We'll have a look at the chart in a second, and the chart looks brilliant as well. They do give an update. Here's their financial year 24 results. Everything growing. Beautiful growth. Revenue up 16.8%. EBITDA up 30.8%. Net profit before tax, not sure why it's before tax, up 54.9%. So the margins are increasing as well. In fact, revenue growth, beautiful over the last 4 years. EBITDA growth has tripled over the last 4 years. Net profit before tax has increased tenfold over the past 10 years from a small base, and the margins have increased. In fact, net profit before tax margin, we'll just call that profit margin, has increased from 4.3% to 14.5%. So this company is growing. They have quite a few divisions. The biggest division is Pentium Hydro. And this is their history. So they have made a few acquisitions in the past. So vertically integrated. But they actually, in this, they do call themselves a water service provider. I think I said something like that. Water services solution provider or something like that. Anyway. And they also provided an outlook. Now, in this outlook, they don't mention any numbers. But they do say management is targeting, I put this in blue, management, that blue color, what's that blue color called? I just say blue. Management is targeting the continuation of the company's year-on-year growth rate, but no numbers. That's why I was thinking, not sure how the market is going to react because no numbers. Anyway, so a good update from the company. I liked it as a shareholder. No way I would have sold shares in this company based off this particular announcement. The low of the day was 34 cents. So it's really interesting. Some people sold it at 34 cents today, which is ridiculous. Silly, silly people. I'm glad I haven't been really following their movement and share prices today. So let's have a look at the chart for Vysarn. It's a pretty good chart. So that's a weekly chart, which looks even better, but the daily chart looks really good. And yeah, fair bit of volatility today, but the good thing is buying has come in. So the enthusiasm of buyers is overwhelming the enthusiasm of the sellers. But this is an absolutely beautiful looking chart. I can't remember when I bought. It was quite a bit lower than it is now, somewhere in here. So this is one of my biggest holdings, by the way, because share price has grown a fair bit since I bought, and I haven't taken any profits. So it is a big position. So an announcement like this is quite important. And I have been thinking maybe I should take profits because my position in this company is getting big. The other thing I like is increase in volume. Nice increase in volume. That's a sign managers are getting interested in this company. And the share price it's not an all-time high, or is it? Yeah, share price was at this levels back in 2012, but I think this was a completely different company. Because if you go back to that particular history, yeah, then started operations initiated IPO. This must have been a backdoor listing in 2019. I can't remember this company going all the way back to 2012. I probably would have discovered this company somewhere along the line. I think I discovered this company back in sometime in 2020. Anyway, so that's Vysarn coming in at number 3. Pretty good day for Vysarn and its shareholders, particularly when you compare it to or contrast it to the overall market. Nice day. In fact, look at the weekly chart. 4 banger weeks for this company. Up 4 weeks in a row. Share price has gone from 29 cents to 41.5 cents. Maybe now is the time to take profits. Okay, coming in number 2. Possibly this company should have come in number 1. But no, I'm going to put it in number 2. Block share price up 4.97%. In fact, I prefer Vysarn after Block. So I'm very happy that I don't have Block at number 1. Share price 99.997 cents. 99.97 cents. They released their quarterly report. I actually did have a look at this, and I went, it's not a bad quarterly report from the company. Like, interesting. Someone did mention this company on Ausbiz The Core a few weeks ago, and they mentioned it was profitable. And I was like, are you sure it's profitable? I'm not sure about that. Anyway, so this is an American-based company, so their financial statements are weird. They seem to start off with the balance sheet and then the profit loss statement, and then their cash flow statement is much different from our cash flow statements. So anyway, so we'll start off with the profit and loss statement because that's how typically I start off with the cash flow statement and then profit loss and then balance sheet. I don't have a preference. If I had to choose one, I'm not sure what I would choose. I don't think you can have one without the other. Anyway, most important thing about this, they have 3 months and also 6 months because they report quarterly, and this is their financial year is sort of the same as their calendar year, sort of, yeah. Anyway, so the most important thing here is nice growth in revenue. Now, they do stuff with Bitcoin. I don't know what they do with Bitcoin, but the Bitcoin revenue sort of is identical to the Bitcoin cost. Not quite. They do make a little profit in Bitcoin, but it doesn't seem like there's a lot. But the most important thing here is revenue's growing, as you would expect with this growth company. But they're profitable. If you go down to the bottom, profitable in the last 3 months and also the last half year. They were not profitable 1 year ago. So this company has hit that inflection point of becoming loss-making to profitable. Another thing I like to look at is, actually, we'll have a look at that when it comes to the cash flow statement. So the other thing I like to have a look at is just the balance sheet. Nice growth in cash. Cash and cash equivalents up about $3 billion. Yes, $3 billion. Equity up to, where is it? 19.3 billion. So, you know, they have a lot of assets, that sort of thing. Where's the assets here? Yeah, most of the assets are in cash. Settlements receivable. Well, no, most of the assets are actually in goodwill. Yeah, goodwill. Anyway, and I suppose a lot of that goodwill would be Afterpay. Isn't Block who bought Afterpay? So a lot of that goodwill would be Afterpay, I would assume. Okay, so let's go to the cash flow statement, which is a little bit different. So the cash flow statement is fairly similar for American companies, fairly similar to our what's it called? The conciliation. Oh, I forget what it's called. It's the reconciliation of the cash flow from operations to the profit, usually found in the notes. That's fairly similar to the Americanized cash flow statement. Here it is. So they start off with the net income. So for Square or Block, it's $660 million. So how do you get from net income of $660 million to operating cash flow of $1 billion? And this is really good when there's a big discrepancy between the two. Some companies in America have a massive loss but are operating cash flow positive. And it usually comes down to share-based compensation. American companies love, particularly tech companies, love share-based compensation. And in fact, for Block, for the half year, share-based compensation, $631.8 million. Yes, $631.8 million. Anyway, so they were profitable, operating cash flow positive, more than likely free cash flow positive as well. So it seems like it's a pretty good quarter from the company. And I'd say it also beat expectations. You can go to this. Where's Block here? How big is Block? Where's Block? Oh, I've got to go to the right page because that was page 2. So Block should be down a little bit. What's the Block ticker code? It is, I'm pretty sure. What is Block's ticker code in America? I think it's SQ. Is it SQ? That is SQ. It has a markup of $37 billion. That's the most important thing here. $37 billion, which means it's way down the list. This is extraordinary. There it is. And they've got no earnings per share. Oh, the guidance was 30 cents. Earnings per share of 30 cents. And their results, which we go back here. Where is it? No, it's the wrong one. 30 cents per share. And earnings per share. They don't have it here. I can't see it there. Oh, no, it's there. Net income per share, 32 cents per share. So these results beat expectations slightly, but that's why the share price is up, because the results were better than expected. Now, if the company put out any sort of forward-looking statements as well, that could have helped the share price as well, but I don't want to really look for that. Anyway, I really don't like how Americans do their results. I really prefer the ASX. In fact, I prefer how the ASX does a lot of things over the NASDAQ and the New York Stock Exchange. Maybe that's because that's how I've grown up as an investor. I just like how they do it. I don't like how there's, like, for the ASX, there's a one centralized announcements section, and I can get that through ComSec, but I have not found a similar way to do that with American companies. There's not one place you can find all the announcements just one after the other, like I can with ComSec. Maybe there is a way to do that, but I haven't found it just yet. Anyway, so that's Block coming in at number 2. Coming in at number 1, we have Resmed. Last time I looked, the share price was down. Yeah, share price is down. It was up for a period, down 2.1%. I don't understand this. Their results were stellar. Really good. And I'll explain why in a second. So as soon as I own a share of this company, so maybe my bias is affecting my judgment. And it all comes back to this page right here, the front page. So year over year revenue growth, 9%. Operating profit up 38%. Non-GAAP operating profit up 30%. So when you see revenue growing 9% but profit up 30%, the first thing that should come to your mind, margins have expanded. And wow, have they expanded. And they've improved by 350 basis points to 58.5%. My major concern about Resmed, probably about 6 months to a year ago, was decreasing margins. Yeah, this company had decreasing margins, and I thought that was one of the reasons why the market was not happy with this company. So let's have a look at Resmed. Yeah, we can have a look at Resmed America. So this is also listed on the American exchanges. So this company has always had really good revenue, really good growth in revenue, really good growth in profits. But the only concern I had, and I think the market had this concern as well, was margins. So let's have a look at the gross profit margins. They had been decreasing the last few years. In fact, let's have a look at the quarters. I don't think I've got the quarterly numbers in here just yet. So what was it, 58.5? They do have it. Wow, FinChat is quick. In fact, I'm going to change the color. How do you change a color? I have no idea how to change colors. I've never thought about changing colors. The only way I know how to change colors is doing this. And then, no, I'll do this. There we go. Now I've got it in orange. So my main concern probably a year ago was decreasing margins. So this is gross margins, 58.1% in March 2022. And it fell from 58.1% down to 55.2%. You might think that's not a big decrease in margins, who cares? But it does affect the company's results, financial results. So if you have decreasing margins and you have revenue growing at 10%, profits can be growing at 5%, maybe even less than that. But if you have increasing revenue and increasing margins, profit is going to be increasing at a greater rate. Now, the problem with increasing margins is margins can only increase so far. So I do prefer increasing revenue over increasing margins. But when you see a company with increasing margins, like Resmed has shown in the last 2 quarters, that's important. So margins have started to expand as well. Companies maintain their growth in revenue, maintain their growth in profit. And honestly, I'll be honest with you, I expect the share price to be up today. I know the market is down, and I just expect the share price to be up. So a little bit of surprise, the share price is down. I would not be surprised. In fact, let's go back to earnings calendar. So Resmed has a market cap of, I don't know. It's somewhere here because I remember seeing it. Here it is. Resmed has a market cap of 31 billion. So let's open up the NASDAQ website. Let's just want to see what the after hours. I'm assuming it must be down, because the share price in Australia is down, so it must be down. Yeah, it's down, 3.6%. So the market doesn't really like this as much as I liked it. And again, I think maybe because I'm a little bit biased. So I've decided to put Resmed number 1. Maybe Vysarn belong number 1, deserve number 1, or maybe Block did, but I've decided with Resmed. In fact, I haven't looked at the rest of the results. Maybe there was something in their outlook. Let's have a look right now. Did they mention, and I'm going through this really quickly, so I might completely miss it. Yeah, I don't think they had anything. Another thing I don't like about Americans and their results is they don't release any presentations. Some of them do, but not a lot do. Yeah. All they released was one little document. That's it. And in that document, there's nothing. It's just so little of information. And they don't mention anything about outlooks. I'm just trying to go through, see if they have an outlook. No outlook. Anyway, so that's all I have for the top 5 stocks of the day. And that's probably all I have for this video. Coming at 54 minutes, let's have a look at a few comments. Why not? Okay. Raul, this is a really good comment. I like this comment from Raul Kalyan. I recently discovered the impact the US markets have on the ASX through your explanations. Yes, it makes sense. It got me thinking. You briefly mentioned that you attempted to trade the US markets. Yes, and Well, I think one of the reasons why I'm quite acquainted with the Australian markets, I'm more comfortable with Australian markets, and I've also found the American markets to be really fickle. So what I do, and did this with Meta a few quarters ago. What I did is when I see a company I like for the longer term, and I see the share price falling because of one quarter, I think that's an opportunity. And we saw that with Meta. That's weekly. If you look at the daily, share price for Meta on the 25th of April fell 10.6% because it was a little bit weaker than expected quarter. I was like, that's ridiculous. So I bought some shares on that day, and that was a low. And share price kept on going up. They released their next quarter, and it was better than expected. Share price took off. And we've seen the same thing. Share price increased today on the back of a better than expected and a pretty rosy outlook from the company. So that's what I've discovered, that I prefer to look for the high quality companies and maybe not trade. Although in saying that, I did trade with 3M, and that was a really, where's 3M? I think it's maybe MMM. 3M company. This was a trade. I just saw the share price, the trend. This was like I saw this and I went, oh, this looks really interesting, the chart. And so this is probably, without doubt, my most successful trade over there. And a lot of my other trades have not been successful because I just find the American markets are way more fickle. You'll see the share price rise or drop 10 to 20% on nothing, on a slight miss or a slight beat in results. And I think that comes back to quality results. If they didn't release quality results, I think the market will be less fickle. Someone else has tried to explain that it's the pod shops, which I still don't fully understand. You can see with 3M company, when they released their last results on the 26th of July, share price rose 23% on the day in one result. In fact, the share price of this company has gone up 50%, no, 60% since I bought. Just because, man, you see that a lot. The market, have a look at Nvidia. Nvidia is, in fact, a perfect case. The fickleness of the markets over there. Over the last 3 days, the share price of Nvidia has gone down 7%, up 12.8%, down 6.7%. There's just so much volatility over there. Anyway, so I've decided just to look or research the high quality companies and just buy them for the longer term. Anyway, you mentioned to trade the US markets, but end up just buying quality American companies. My question is that, have you attempted to do what you normally do on the ASX, trade breakouts, replicate your technical portfolio on Wall Street? I was curious as logistically there's more opportunities available. That's what I thought in the American markets, but I've noticed the volatility and charts that make my head spin because they don't make any sense. Would love your thoughts on this question. There we go. Yeah, so I am answering that. I thought there would be way more opportunities out there. And there's so many opportunities. Now, one of the advantages I have in regards to the Australian market is I know most of the companies. Not well, but I know most of the companies over there. I'm seeing all these companies I've never heard of. So if you go back to this earnings calendar, so many companies here I've never heard of. And these are big companies. What's the first company? Like Vertex Pharmaceuticals, I have no idea what they do, but they have a market cap of $127.9 billion. I know Booking Holdings. Eaton Corporation, no idea. Market cap of $121.9 billion. Regeneron Pharmaceuticals, no idea. Cigna Group, no idea. Southern Company, do they make Southern Comfort? No idea. Yeah, so many companies here I've never heard of, and that is one of the limitations I have. And the other thing is, I just don't like how they trade. It's just too fickle. There's too much volatility. I just don't like it. But that 3M has me thinking there could be, as I gain more experience in the American markets, I will be able to see these sort of situations, these setups. I think they still will work. How I trade in Australia will be able to be transferred over there. The other thing is, because there's so many companies, I need a better filter or screener. And the reason I say that is my Australian screeners are really light. So this is my 3-month high screener, 155 matches. If I go to the American screener, it's probably got over 1,000 matches. Let's have a look. Has 1,470 matches. So I need a screener where I can really decrease the amount of hits. And I haven't come up with that just yet. Hopefully I will do that. My crossover screener would be much lower. So this is my 2050, my 100-day moving average crossover. This has 209 matches. In Australia, it's like 10 or 15 matches. So I do need a better screener. Some screener that would be fairly similar than my investing strategy. I haven't come out with it just yet. I just discovered 3M company on a bit of a whim, and I just saw the chart and went, oh, this looks pretty good. Looks pretty bullish. And it's played out exactly as I hoped it would, and how's the technical analysis part of me thought it might. The sentiment in this company just shifted. And obviously the market thought, this company's going to release something pretty good. And it did. So thank you, Rahul Kayen. The other thing I should mention is I never give up. I want to break into the American markets, be able to trade American companies. Maybe I have to live in America to do that. I don't know, because their markets are open when we're asleep. They open at 11:30 p.m. and close at 6 p.m. or something like that, or 6 a.m., not 6 p.m. So typically that's when we're asleep. And does that matter? Not necessarily based off my strategy, because for the Australian market, I'm usually not really following what happens. So yeah, I don't know. But I am probably moving down that road of increasing, maybe not increasing. What would I say? Of taking advantage of what I've learned on the Australian markets and applying that to the American markets. And I think it might take a little bit more time, because I have got to this point. It's taken me 15 years to get to this point, just by learning technical analysis and applying that to the Australian markets. And I have thought it should translate fairly well to the American markets, but maybe not, because of that perceived higher fickleness and higher volatility. So anyway, yeah, that's probably all I need to talk about when it comes to that reply from Rahul, or that question from Rahul. Hopefully I have answered that fairly well. Maybe I've just rambled on, don't know. Anyway, that's all I've got for today's video, because the time is now past 1 hour for this particular edition, and the time is now 3:37 p.m. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.